start by saying that this is source-based information. Now, even if you look at what's happened over the past several months, there have been media reports of unhappiness at the level of founders with certain decisions that have been taken by the Infosys board. Now, what I am given to understand is that differences have cropped up in the recent months and they continue. So the response so far that the founders have got, they feel, is not adequate or satisfactory. Also, my understanding is that concerns have been raised as recently by the founders in January, both by written communication as well as via a meeting. Now, what I am given to understand is that the founders of Infosys have actually suggested certain things to the board of Infosys, certain things that they ought to do to broadly improve what they see is board governance. What I am also given to understand is that the founders have suggested bringing in certain value-based people. Who could those be? We don't know, but that is a suggestion that the founders have made. They have, of course, raised concerns over issues that we've addressed in the past and that have been reported on in the past. So, for instance, a majority of the concerns are linked to the severance packages given to Rajiv Bansal, the former CFO, also the former General Counsel David Kennedy. So those are two issues that continue to cause concern as far as the founders go. Now, the founders have also raised concerns, and again, this has been something that has been addressed in the past, with the compensation given to Vishal Sikka, the hike in compensation given to Vishal Sikka. So that's the concerns aspect of it, and the concerns that have been raised as recently as January by the founders of Infosys, and also suggesting a way forward or the changes that they would like the company to make. Now, what I am given to understand, and this is the other side of the story, from sources within the board, that there is, to start with, complete alignment between the management and the board. The board backs Vishal Sikka 100%. The board believes in Vishal Sikka 100%, and there are no concerns there that the board has with respect to performance. Yes, there have been certain delivery and execution related issues, but the board backs Vishal Sikka 100%. Now, on the specific concerns that have been raised by the founders, on the issue of Rajiv Bansal's severance package, the response that I got was, look, a committee was set up, an investigation was done, there was no impropriety. Was that perhaps generosity? Yes. Accept that, but there was no impropriety. Even the investigation proved that there was no wrongdoing. The board believes that this is a dead issue. The board believes that this is an issue that has caused more noise and is not an issue that has actually been raised by any investors. Now let's talk about some of the other issues or some of the other concerns. The former General Counsel David Kennedy's severance package. When I put that question, the response was that, look, this was as per the employment contract, not for cause, was supposed to be a severance package of 12 months, which is what has happened, and hence, by not complying with the contractual obligation, we would actually be in fault of reneging on a promise made, and hence it was mutually beneficial to part ways along the contractual obligations that had already been inked. Now, when it comes to the issue of the hike, Vishal Sikka's compensation hike, the response is that, again, a lot of noise around that issue, and a lot of it has to do with optics, because it might look like there is a significant percentage hike, but if you look at the fine print, then the cash component and the fixed component has actually been cut. The variable component has gone up, and it's very closely linked to the 2020 targets that have been set out by Vishal Sikka and by the company. So it's linked to performance very clearly and very categorically. What I am also given to understand is that the board believes that they're happy to take different points of view and engage with founders, address some of the concerns that have been raised. Some discussions have already taken place. But at the end of the day, the board must do what is best for the company and what is best in the interest of shareholders. So some suggestions have been taken on board, some perhaps will be taken on board, and maybe some won't be. But the fact of the matter is that as far as the board and the management is concerned, there is a harmonious and a very meaningful relationship, is what I'm given to understand. There are also some suggestions that, look, we've gone from a founder-led model to now a non-executive professional-led board, and perhaps that has resulted in a certain amount of friction, and these sort of transformations will see some degree of change, and the change of guard could lead to some degree of friction. But is it as grave as it is being made to sound? Perhaps not. So at this point in time, engagement is on, discussions are on to try and resolve some of the concerns that have been raised. Kritika, of course, has also been speaking with sources and joins us now with what she's picking up. Kritika.
Well, what we understand, and we have been posing exactly these questions to our sources within the management of Infosys. Now, the sources at this point do admit that, yes, there have been broad questions and broad suggestions that have been made, inputs that have been made with respect to the concerns that Shereen just pointed out. What we understand from our management sources is that while they are looking into these concerns, they are looking into the suggestions and the broad questions that have been put forth by the founders and by some of the founders, their stance is that largely the concerns are related to delivery in and operational performance, and that is an issue which the entire industry is facing, given the fact that there has been a tightening of spending, there has been a macroeconomic environment where IT players are right now in a shift, going from the traditional services to the digital services to automation. The entire industry at this point in time is struggling, and as a result of that, the management believes that Infosys is performing versus most of its peers and is actually ahead of many of the other companies that are in the same space, struggling with the same issues. The other concern with respect to corporate governance, the management does believe that, yes, these are things that are evolving. They are constantly looking at redoing and working on their policies, and these inputs and suggestions will be taken into cognizance. The point about Infosys expanding in US has also been raised up in terms of questions as to why is Infosys's headquarters, or is Infy's headquarters now moving to the US? What is the reason why there has been a significant amount of investment in terms of the United States operations? And our sources have told us that that is purely based on creating a global delivery model, creating an on-site presence, given the fact that they want to increase local hiring, and it is completely fitting with their strategy of a global delivery model where they are closer to the clients, and it's in line with their strategy. Let me also point out what Infosys comment was when we send them a detailed query. This is the Infosys official statement to our detailed email with all the points that Shereen just raised. And I'm going to quote it verbatim over here. Infosys says, with regard to the 3 instances mentioned in your email related to the governance, the company reiterates that these decisions have been made bona fide in the overall interest of the company and that full disclosures have already been made thereon. The board receives suggestions and inputs from various stakeholders, including promoters, which are evaluated with due importance. The company will continue to be guided by the overall interests of all stakeholders. Shereen?
Well, that's right. That is the official comment that's coming from Infosys to our queries. Now, you know, why does all of this matter, or does this matter in any way? Because, yes, you know, you don't need distractions at this point in time. This is a massive transformation, not just for Infosys, but for the Indian software services industry and the Indian software services model. So any distraction is really not great as far as management bandwidth is concerned. But at the end of the day, you know, some of these concerns that have been raised about compensation, about large severance packages, and so on and so forth, what do they have, if anything at all, to do with performance? Prashant has been tracking that story and joins us now. Prashant, you know, if we were to look at the performance metrics, how does Infosys stack up?
Oh, absolutely. I think performance at the end of the day is all that matters for investors. And remember, Dr. Vishal Sikka, when he took over on the 1st of August 2014, came in at a time when Infosys was not a steady ship. It had seen a tremendous amount of management churn right at the top, and he came in to kind of steady the ship. So what we essentially did is take a look at 4 key parameters and how Infosys has performed vis-a-vis the industry, I think the second part, the vis-a-vis the industry, relative to TCS, for example, is crucial. Just looking at Infosys under, Dr. Vishal Sikka wouldn't make that much sense, because it would not give you a sense of whether it's doing better or worse off as compared to some of its competitors. So let's start with the stock price. I think the graphics are up on your screen. In terms of what the stock has done since Dr. Sikka took over, I think it's done very well, 11.5% higher. Since that time, if you look at TCS, which is a close competitor and the most closely compared at least, it's actually down. It's down about 12.9% or so. The second big parameter which we looked at is revenue growth, and I think this is the holy grail. For this, what we've done is we've looked at the starting point, normalized it for Infosys and TCS, and seen and looked at how dollar revenues have grown from the second quarter of 15 when he took over all the way to the third quarter of 17. In the case of Infi, the growth has been about 15.9%. If you look at TCS, the growth falls a little bit to about 13.9%. So again, in terms of growing revenues, Infi has done better than TCS. The only other company I think which has done better than Infosys in this period is HCL Tech. The third category is profitability, EBIT margin, core operating profits is what we looked at. Under Dr. Vishal Sikka, Infosys' EBIT margins fell 40 basis points. Now you'd say, well, that's bad news. It's not really great. But again, relative to what? We looked at TCS's margins in the same period, and TCS's core margins are down 110 basis points. So Infi has not done badly at all. Revenue productivity per employee. To calculate this, we took the overall revenues at the starting point and the end point and divided this with the average employees over a 2-quarter period. And these are the numbers. Infosys' revenue per employee is down 5.2% in the period that Dr. Vishal Sikka has been CEO and Managing Director. In that same period, if you look at TCS, the revenue per employee is actually down close to 8%. So I think the numbers are stark. They tell a story of their own. At least looking at these numbers, I think investors would be happy with what Dr. Vishal Sikka has been doing, and of course what he's been aiming to achieve at Infosys. Back to you.